Welcome back, YouTube. So after a lot of requests, I'm going to do a Doge AMC video and what I believe that we're witnessing here. I'm going to discuss the wealth transfer that I believe we're having, which is something similar to like a tennis play, and also what I'm doing going forward. Now, to give you a little recap, pretty much I invested in Dogecoin like around like 5 cents, like the 3 cents to 5 cents range, and most of my AMC DCA is below $10. So, but most of it was accumulated between like the 8 to like 9.50 range. After I reviewed the opportunity with AMC, I knew it was something that I wanted to participate in, and I knew that it would provide like a great opportunity for a lot of gain as far as for capital. Now, just outside of the opportunity for AMC, I noticed that a lot of my viewers very directly told me that they were moving money from Doge to AMC just for the short term. They still believe in Doge, but they take their profits from AMC and put it back into Doge, which can work out to your benefit if you happen to time it correctly. But you just have to kind of run the numbers, because if you purchased, Doge at like 65 cents and sold at 30 cents and put it into AMC, then you're going to have to factor those losses into your profits as well. The reason I say that it's like a tennis play as far as for the money flowing out of Doge into AMC, and I believe it will come back, is because I still consider myself a small YouTuber. And if I'm seeing a lot of comments, and I noticed that it was of a great number on my channel with my roughly 30,000 subscribers, then I can imagine what the actual number of people is and the actual amount of money that was moved from Doge to AMC. Now, I do believe Doge would have had a correction either way, but it's possible that the amount of money that was moved was severe enough that it caused Doge to dip down a little lower than what it would have been. But either way, when Bitcoin crashed, it pretty much drags the other cryptos with it. So I do believe Doge would have corrected either way. The plus side to this is I do believe that because of the amount of money that flowed out and the potential for the people's investment to increase, that also means that much stronger numbers would come back to Doge, which would benefit the Doge movement in the long run. I am an absolute believer in the AMC movement and the AMC squeeze. Shorts must be covered, not some, but all of them. And I know that from a hedge fund standpoint, last year with the pandemic and a lot of the country being shut down, it was a sure thing to pretty much short AMC because they basically had no revenue. But now things are a little different, because the average investors, we have access to information, and now we're seeing the organization as a community with that information. So I believe even going forward, we'll see similar things like with AMC and GameStop until things are changed and made on a more level playing field. But now we're seeing the rise of the organized investor, and I believe in the long term this is going to change everything. As long as there's questionable behavior by Wall Street, we can expect to see things like this happening and finding out as far as for companies shorting several 100% of the actual available shares. Now, for some of you, if you don't know what a short is, or naked sharing, or phony shares, and what exactly the squeeze is going around AMC, I found a example online. If you know the author of this, or if you've seen it before, please tag them, because I didn't create this at all, but I believe it explains what a short squeeze is and what's going on with Citadel in the simplest form. So pretty much it uses the example of a hedge fund borrowing books from a library, and I'm just going to read it here so that way I don't leave anything out. So in very simple terms, hedge funds borrowed all the books and sold them all. The library wants the books back and is charging them increasing late fees. So the library is making a lot of money right now and has no chance of pretty much going out of business. People won't sell their books back unless they pay a high asking price. So the hedge funds make fake books to try and convince these people that their books are worthless, since there's so much supply. The problem is everyone also is buying the fakes. Because of the fake books, the supply is more than 100%. Eventually, they will have to buy back all the books, fake and real. And since they don't know who owns the real ones, this will cause huge price increases. And when we see things like ladder attacks or them taking out new short positions, this is pretty much them prolonging the inevitable and digging the hole a lot deeper. And what pretty much happens is, I know the point of them taking out new short positions and keeping the price down and causing the wide swings is because you're pretty much going to shake off a lot of the paper-handed people, or the people that invested and they needed the money back a lot quicker and they can't afford to wait. because pretty much the more shares that they have come back, the more that they can cover. So they're pretty much doing this to kind of like shake the tree and see who they can get to fold under the pressure, or who they pretty much can outweight. To me, the longer they drag this out and the more that they continue to short it, the stronger position that I go. I've doubled down on a couple of different occasions since they've continued making the price dip down. This week, I'm expecting some really big things, but I'll touch on that a little later. But as long as these prices are down, especially like below 100, below $75, like I'm still increasing. These kinds of activities on Wall Street and with hedge funds have been going on for a long time. They're able to pretty much short more shares than in existence. You know, they can short several 100% of the shares that's in existence if they want to. Meanwhile, if you and I write a bad check, we'll go to jail. The stock market in itself is a great opportunity to make money, but I think we all can agree that it's not an even playing field. So when we take action like this, organize actions against hedge funds and pretty much expose them on a national level, we can expect regulation and rule changes to apply soon. The house doesn't like to lose money, and you can think of Wall Street like Vegas. Those hotels, those casinos are big, beautiful, and they don't stay in business because they pay out money. Most of the money flows one direction. So where does that leave me? Well, I'm actually invested in both. I didn't liquidate my Doge to invest in AMC, but I'm an absolute believer in AMC. And I know that most people may not have that opportunity available to them to pretty much diversify and invest in both, and I understand that. But I do believe that we're going to see a huge spike in AMC, and the potential is there. It's high risk, don't get me wrong, but the potential for gains is absolutely there. And based off of May 14th and May 21st, pretty much where we've seen the price at a higher point, it dipped down pretty much like dramatically, but then recover. It doubled pretty much the following that following week. So I'm going to put a little note up here that'll show you what I'm talking about. But if history is any indicator, that means that we can expect a pretty huge price increase that should surpass the previous high this week. Now, for my Doge people, I do recommend that if you if you had to liquidate your entire position in Doge, or if you chose to and you moved it over to AMC, just be careful. And pretty much if you are planning on reinvesting in Doge, just kind of keep in mind that you're going to have to move quickly, because you cannot time these rallies or any changes or new events occurring with Doge, because that money could flow back relatively quickly. And if you're not already in position, you can end up missing out on a lot of gains just simply because the money was somewhere else, or you had to wait for it to clear, for it to come back. Because investors, they typically have money on the sidelines ready to go. So when Doge starts spiking, they can actually flow a lot of money into Doge immediately because they have it available. So when you go all in somewhere, you have to keep that in mind, that you could miss out on the potential because you're bouncing money back and forth. In conclusion, hold your Doge if you can. AMC, if you're in there as well, definitely stay in there. I believe AMC is going to Pluto if everything aligns. We'll see this week if the hedge funds have anything extra up their sleeve, or if they double down. We'll see this week, but I'm absolutely expecting a breakout. If you enjoyed this video or found any of the information useful, please give it a like and leave a comment. Please continue sharing. I appreciate all of you. If you'd like to join the email list, I have a link for that in the description as well if you wanted to join the private group through Patreon. My goal here is to provide you with information so that you can make an informed decision. No hype, I'm not putting in any fluff. Just wanted to give you the information and share some of the things that I'm doing and my thoughts so that you can make the decision that's best for you and your household. If you're looking to diversify your portfolio, I recommend Webull. Right now, if you open up an account with $100, and you'll get 2 free stocks valued at up to $1,600. If you're not on YouTube like that, you can certainly follow me on Instagram at I am David Mitchell Jr. or Twitter at JR David Mitchell. Thank you. I appreciate your time, and until next time.